Bretton Woods 3 has already started. Do this now. The global financial markets are resetting as we speak. The original Bretton Woods Agreement in 1944 put the entire world onto a global monetary standard. And while many have been waiting for a reset of the global financial system, or a Bretton Woods 2 moment, as the IMF has been calling for, I think it's already happened. And what we're witnessing now is a Bretton Woods 3 moment. So in this video, I will break down what Bretton Woods 1 was, when that ended, and what the unspoken Bretton Woods 2 was that most people didn't notice, why it suddenly broke this week, sending us into a Bretton Woods 3. The dangers for global markets and your retirement accounts, as most people lose almost everything during an economic reset. And of course, most importantly, what you need to do to prepare and protect yourself from these coming changes. So let's go. The global financial reset. That's right, it's happening right now. We skipped past Bretton Woods 2 and we're going right into Bretton Woods 3. It's going to be big. You need to be paying attention now. Real quickly, before I jump into and explain what Bretton Woods 2 actually was and what's happening in Bretton Woods 3 and how to protect yourself, I do want to let you know that I am having a special event just to cover this. We're having Market Disruptors Live. It's our second annual event. It's coming up soon. There's a link down below. I have about 15 of the top speakers in the world that are going to tell you what they think is going to happen over the next couple years, and of course, what you need to be doing to prepare yourself. I'm talking some of the best speakers in the world. I have Harry Dent. You love my work on cycles and demographics. Well, the king of cycles, Harry Dent, is coming. We have Danielle DiMartino Booth. She's an actual Fed insider, used to work at the Federal Reserve. She's going to be speaking. We got Luke Grauman coming. Of course, my good buddy George Gammon. I'm sure you love George Gammon, and so many more. Check out the link down below. Market Disruptors Live. It's our second annual event. You do not want to miss this. The world is in a tailspin, and they will tell you what you need to be doing. And of course, come meet some new people, build that community. All right, now let's go ahead and jump right into this. All right, so we're talking about a Bretton Woods 3. Now, of course, Bretton Woods 1 happened back in 1944. Most people didn't know we had Bretton Woods 2, so let's talk about that. So Bretton Woods 1 was when the entire global system, the financial system, was reset. The entire world got together and agreed to reset the global financial system and put us onto a one world monetary system. Of course, that was a gold system. $35 equaled 1 ounce of gold, and then all the other currencies of the world pegged themselves to the dollar, which of course was pegged to gold. We're on a gold standard, and that was a commodity money. So what do I mean by that? Well, commodity are real things. So that's gold, that's oil, that's uranium, things like that, real things. So the world was on a commodity money. Now, for all of history, money was commodity money. It was typically gold, 5,000 years, and of course it was rocks, things like that before. All right, that was Bretton Woods 1, 1944. What most people didn't realize, and to be honest, I hadn't really thought about it this way either until just recently, then we had the Bretton Woods 2, which took us, we can see right here, I have a chart that kind of illustrates this. From 1944 to 1972, we were on this commodity money, if you will, this gold system. You can see all the currencies of the world were basically pegged to the dollar, and then the dollar was pegged to gold. But then something happened that I've talked about extensively, never really putting it in terms of the Bretton Woods 2, but here, you remember this point in 1971, I talk about it all the time, where President Richard Nixon closed the window to gold. Basically, it's when the United States defaulted on its debt. We said, we're no longer going to pay our debt obligations. You can no longer redeem those dollars for gold. And at that point, the dollar was no longer backed by gold. And if the dollar wasn't backed by gold, then all those other currencies that were pegged to dollars weren't backed by gold either. So at that point, we went into Bretton Woods 2, into a new agreement. If Bretton Woods 1 put us onto a gold system, then in 1971, Bretton Woods 2 put us into a fake fiat system, where it was just fiat currencies and treasuries. And so basically, Bretton Woods 2 moved from a commodity to a fiat system, okay? And that was from 1971 until about last week, when everything has changed. What I'm talking about? Well, I'm talking about a Bretton Woods 3, which is a move back from fiat back to a commodity money. And really it started actually sooner than that. I'm putting here that it really started back in 2008, and it really took some time to kind of zoom out and see actually what's going on. And once we dig in deeper, you're going to understand. But to kind of highlight this, the shift back to this commodity money really started back here in 2008. Now you can see from this chart here below, or that I have on the screen, basically this is central banks And what we can see here is that central banks have been net purchasers of gold since 2008. So we can see here, since the Bretton Woods Agreement, we can see that central banks were not net buyers of gold. And right here at 2008, they've been increasing their gold reserves. As a matter of fact, over the last couple of years, they've been buying more gold than any time in history since 1971, when we were still on a commodity standard. So you can see this is when this change started to happen. Like I said, I hadn't really thought about it, but then just recently, the entire world was thrust on a system. We can see Bretton Woods 2 crumbled this week, and what happened this week that basically torpedoed the entire global financial system? Well, it was the United States slapping sanctions on Russia, more so specifically, not just sanctions, but literally freezing their accounts, seizing their accounts, their foreign exchange reserves. So their dollars that they held in the bank, their US treasuries that they were holding, their SDRs, all gone. We can see right here that banks are stomping Putin into tapping his $630 billion war chest of money that was saved up. He was saving money, and at this point, what nation in the world would ever want to hold US dollars in reserves ever again? Russia, one of 3 global superpowers with nuclear weapons, just had their bank accounts frozen. And not just frozen, but seized. And if it can happen to one of 3 global superpowers with nukes, it can certainly happen to you. It can happen to any other country. So why would any other country in the world ever want to hold dollars? All right, so since these sanctions started happening, since their bank accounts got frozen and seized, the entire world has gone into a tailspin, and things are about to get very, very wild. So let me break this down for you. So I've been talking about an energy crisis. As a matter of fact, I believe it was about almost 2 years ago. I think I have a video with almost 1 million views. Editor, let's go ahead and throw it up here, where I predicted that an energy crisis was going to come for the world. Then about, 6-8 months ago, I made another video talking about how there was going to be a global energy crisis. So this has been happening for a long time. And we had this energy crisis that started in 2020, and it has only continued to get worse. And of course, now we're sanctioning Russia. Now, the reason why I knew this was going to happen because of policies that were put in place. What policies I'm talking about? Well, policies that shut down our own energy. So it happened in California. We turned off our fossil fuel plants. We turned off our nuclear reactors. And so, of course, we had shortage of energy in California. It happened in the United States, and now that's happening in Europe. So in the Netherlands, they shut off their natural gas. In the UK, they shut off their natural gas. In Germany, they shut down the nuclear reactors. And instead, they got dependent on Russia for energy, which sounds pretty good for Russia because now there's a lot of demand for their products. The problem was for the rest of Europe, it didn't work out too well. As a matter of fact, we saw natural gas increase by over 1,000% in Europe. So if you're living in Europe and you're buying natural gas, your prices went up 1,000%. Not too good for you there. The same thing we saw in Spain. We saw their prices go up over 1,000%. You can see had been stable for a long time and just shot higher as well. And while prices have been going up by 1,000%, 1,100% in Spain, like I said, it's been good for Russia. However, the problem is now sanctions. Sanctions on Russia. We don't want to buy their energy any longer. The problem is we still need their energy. Now we can see here the situation is fluid, they call it. It's a dangerous situation. It's estimated that about 70% of Russian crude trade is frozen. So that's their crude, that's their oil. Russia has been exporting approximately 5 million barrels a day of crude oil, the equivalent of about 5% of the global consumption, as well as nearly 3 million barrels a daily of refined product. So supply and demand. They've been providing a lot of oil to the world. If we don't have it any longer, the supply goes down, but guess what? The demand stays there. And so what do you think happens to the prices? Of course, we saw that it goes up by 1,000%. We can see that. We can see the exposure right here. Marathon was a top U.S. buyer of Russian crude oil, and we can see that Monroe Energy has been buying about 10 million, almost 11 million barrels of energy, and they've decided that they are not going to buy any of that energy any longer. So this is really making this energy problem that we have a lot worse. Now, back to this Bretton Woods 3 moment. Remember, it was commodity money, Bretton Woods 1. Bretton Woods 2, end of the gold system, put us into a fiat or treasury-based system. no commodity, and now we're moving back into a commodity-based system. Because if a nation can't hold fiat or treasuries in their reserves, if Russia got their accounts frozen and seized, what are they going to do? Well, they have no choice but to go back to commodities. And of course, the commodities are in a short squeeze. That's what we call it. Now, you might have heard the news over the last couple of days. Nickel, which is a metal that's used for batteries, EVs, things like that, shot up like like an altcoin, if you will. This is like a GameStop short squeeze situation, if you will, where what you have is you have a lot of producers, whether it's gold miners or nickel producers, et cetera, because they're so long, meaning they have all that material in the ground, plus they're mining it. A lot of times what they'll do is they'll hedge that by putting shorts on it. And this led to a short squeeze, sort of like GameStop, where the price started going up so fast they had to start covering those shorts, which then squeezed the price up even higher, and it shot up higher. As a matter of fact, it went up 500% in that short period of time. Now, Russia owns 10% of the global nickel. So because of sanctions, if we can't buy the oil from Russia, we can't buy the nickel from Russia, what do you think is going to happen? We're going to run into massive supply chain problems, and we're going to have massive shortages, which then lead to short squeezes. We can see when it comes to nickel, these are the top producing nickel nations in the world, and here we have Russia at number 3. So if we start sanctioning Russia, we could expect to see a lot more of those problems. We also seen similar things in gold. Gold has been rallying hard so far. We can see right here, big moves in gold, almost like again, like an altcoin, like a GameStop situation. As a matter of fact, it's up 18%. You can see that green arrow like that. And again, we have the same problem. We have a lot of demand for gold, and there's just not enough supply to go around. There's even rumors of maybe COMEX breaking. And so what's happening is more people are demanding physical gold. They don't want to trust that fake paper anymore. Of course, there's not enough to go around. And all it's going to take is one bank to miss a delivery, and they'll realize that all that fake paper gold is worth nothing, and it's going to send the market higher. We can see here that the open interest in the COMEX gold, which is the futures market, rockets 20,000 contracts. We're now officially at 640,000 contracts, which is very, very high. So what happens when you force 2,300 tons of gold off the market? It's not rocket science here. Supply and demand. You take all that supply off the market when the demand is sky high, and we could see gold go to prices that you might not have ever imagined you would see in your lifetime. And it can happen just like that. Now, we have the dollar shortage is emerging. So this is the next piece of it. So remember, people don't want the dollars. They want to move to commodities. The problem is that we still have a need for the dollar. So we have a massive supply-demand problem. So the FRI-OIS is the difference between the 3-month LIBOR rate and the overnight federal funds rate. So this is the amount of interest that the banks charge each other. And of course, just like supply and demand, when there's more money to provide liquidity, the rates go down. When there's less money available to provide liquidity, the rates go up. Very easy to understand that, right? And so what we can see when we look at the spread on those rates, we can start to see the health of the banking system, how much liquidity is in the system. Now, when you see a spike in the rates like this, what do you think that means? If this is about I'd hate to call this a healthy market. Over the last 2 years, we've been anything but a healthy market. But if this is the trend line of a healthy market, when you see something spike up this high, does that look healthy to you? Well, it certainly doesn't look healthy to me. And so that tells us that we have the highest spread since July of 2020. Remember, the market crashed in March of 2020. So we're at the highest spread since we basically had to crash 2 years ago. It doesn't sound good. And we can see it again in this chart right here. We can see it just starting to spike right here. The banks are starting to get very nervous. They don't want to lend money to each other. They don't want to provide that liquidity. The banks are very fearful, and the commodity traders are starting to hoard dollars. So the banks want to hang on to the dollars, just like you, right? And when the market crashes, you don't want to go spend your money. You want to save it. You want to make sure you have it. And that's exactly what's happening to the commodity traders. The bankers are holding on to that. The problem also is that this Russian situation is only exacerbating that problem. So we have all these sanctions on Russia, so they can't sell their commodities for dollars. So there's a dollar shortage there. And then because of the sanctions, Russia has made it where no companies can export dollars either. They can't trade on the FX exchange because they don't, they're sanction me, I'll sanction you sort of a thing. But the problem is now these debts aren't being repaid in dollars, which is leading again to a massive shortage of dollars in the system. All right, so what we have here, there's this letter that's been going around. This is Zoltan from Credit Suite. This has been going around the internet, the interwebs, if you will. You might have already seen this, which of course is what inspired this video. And he says here that if you are long non-Russian commodities and short the related futures, you are likely having margin calls that need to be funded. So that is causing this dollar liquidity crisis. Anyone in the commodities world is experiencing a perfect storm as correlation suddenly shot to 1, which is never a good thing. But that's precisely what happens when the West sanctions the single largest commodity producer of the world. So we have the single largest commodity producer in the world, which we can't buy their commodities anymore. Again, supply and demand, of course. What do you think is going to happen? Which sells virtually everything. What we are seeing at the 50-year anniversary of the 1973 OPEC supply shock is something similar, but substantially worse. The 2022 Russia supply shock, which isn't driven by the supplier, but the consumer. So they're talking about the 73 OPEC supply shock. So this is the oil shock that sent gas prices so high that in the United States they had to ration gasoline. As a matter of fact, you could only get gasoline on certain days based off of what your license plate was. That was the shortage we're talking about. And he's saying that we have basically a similar shock happening right now today in Russia. And of course, this is all due to sanctions. You heard it. Now, we've had similar problems with these dollar shortages happen a few times throughout history. A few of the big ones are 1997, the Asian crisis, which then led to the 1998 Russian debt default. And it's basically the same thing. We had a shortage of dollars happening. And of course, 2008, the great financial crash. Now, a lot of people think that the great financial crash was caused by the banks in the United States some people say it was because homeowners got too greedy and bought too many homes. That's not really true. It was really the banks over leveraging themselves too much, and then it really spread throughout Europe through the euro-dollar market. And the problem was, as that collateral started drying up, and as they had to start covering those bets that went bad, they needed dollars in a really bad way. They were short dollars. So we can see here in 2008, it was a dollar appreciation in 2008, which was the safe haven. And so everybody was scrambling to get into the dollar, which has typically been the risk-free trade, the safe haven everybody wants to go. And so that caused this massive dollar shortage that we're talking about. And then, of course, we can see same thing happening here. A global rush into the US dollar is driving extreme market moves and a temporary shortage in dollars. And so that's what we're seeing again happening right now, which is why the US dollar is going stronger, because there's a massive rush into liquidity. There's not enough dollars to go around. But what's interesting is not because the dollar is getting stronger, it's because of the crisis that's happening, which is exactly why we see gold going up at the same time as the dollar. Typically, if the dollar was going up, we'd see gold going down. But in this case, we're seeing both the dollar and gold go up together. All right, so how do we solve this problem? How do we solve the dollar shortage? Well, the government typically tries QE, quantitative easing, where they put reserves into the banks. But if the banks aren't loaning that money back out, it doesn't really help. And of course, the other problem would be that maybe we could get back into these Russian commodities. The problem is nobody wants them. So we can see Russia's key oil grade was bid at a discount of more than $18 below. All right, but nobody's buying it. Even at that price, traders have been unable to find willing buyers because, of course, the whole world is sanctioned from buying them. Nobody wants to buy, ship, or store Russian oil. So we have a serious problem on our hands. Now we can see back to Zoltan's letter here. We can see, if you see the pattern I see, you should be concerned, he says. Mortgages were like that too before 2008. Public or private, prime or subprime, they all traded at par until they didn't. Everything's going good until it's not. That's kind of the gradually then suddenly piece. We can see here Russian commodities today are like subprime CDOs were in the 2008 crash. Nobody wants them, nobody wants to trade them, which is causing a massive problem, only in a much bigger proportion today. He says someone somehow must always provide a backstop. Someone has to provide this liquidity. Everybody's rushing to get it. Where are they going to get it from? Well, he says that if we're right, and this is a crisis of commodities, which again, the real things, as 2008 of sorts thematically, if not in terms of size or severity, here's the question, who will provide the backstop? We see, but only one entity, the PBOC, the People's Bank of China. Of course, China comes to name, but can the PBOC do it? Can they provide enough liquidity? Now, we know they're already scrambling to do this. I've reported this in a couple of videos here, that Russia and China had agreed to this 30-year gas deal via this new pipeline, a 30-year deal. This was done in February 4th, almost like they knew this was going to happen with the war, and so they preemptively made these deals to lock that in at a low rate. So the question is, can China provide the liquidity necessary to do that? Can China bail out Russia? We know the Fed can't bail out Russia because, of course, sanctions. The Fed, remember, it's a dollar shortage. The Fed needs to provide the dollars. But the Fed can't bail out Russia with dollars because of sanctions, and so will they just let the world crash? They're kind of stuck in a rock and a hard place here. So again, the solution, can China bail out Russia? Well, maybe they could buy all the natural gas, all the oil, all the commodities. The problem is they can't buy them in dollars. So what does all this mean? If we break all this down, what does it mean? Well, nobody wants to hold FX reserves. Nobody wants to hold foreign trade reserves. That's a problem. Why would you hold your dollars or foreign treasuries when you know that the United States can just seize them or freeze them anytime they want? So that means that the US dollar as a reserve is in danger, right? Because like I said, who is going to hold that? So in this situation where nobody wants to hold US dollars, what are they going to hold? Well, like I said, we're going back to a commodity-based money, and so the commodity-producing countries will win. Of course, who are those? Well, Russia has a massive amount of commodities. We can see here that they've been exporting a massive amount of wheat, corn. Between Russia and Ukraine, they control over 30% of the wheat and corn. That's a massive amount. Of course, they have all the base metals, the nickel, as I already showed you. Of course, the oil, the natural gas. As a matter of fact, they control about 25% of the global market, 26% of natural gas reserves, and they got a lot of gold. As a matter of fact, not just that, China has also rumored to have about 30,000 tons of gold on their own. So at the end of the day, the commodities will win. Now, the United States has commodities. We have natural gas and we have oil. Of course, President Biden's very first day in office was to shut all that down. We shut down our oil pipelines. We shut down our oil leases. We decided we don't want to get oil out of the ground anymore. We'd rather be dependent on other countries. Now he's begging Saudi Arabia to get more oil. He's making deals with Iran to let them increase their uranium and their nuclear program so we can get oil from them, trying to get oil from Venezuela. Anybody except for getting energy directly here in the United States, which of course is pretty interesting. Now, how do you protect yourself if we are really moving into a Bretton Woods 3, a reset of the global financial system, moving from a fiat money standard where you would save in dollars, governments would save in dollars, and moving into a commodity-based money? Well, what are you going to do? Well, the first thing to understand is that it's not going to be smooth. It's not going to be easy. The world is not ready for this. This is not ready for a smooth and orderly transition that was organized in Bretton Woods 1. This is a chaotic mess. We're seeing massive dollar shortages, giant euro-dollar exposure that we don't know how this is going to work out. So expect supply shocks, expect shortages, expect massive volatility to happen. How do we protect ourselves? Well, we buy inflation hedges like gold and Bitcoin. Of course, you know that I like both. I think it's gold's time to shine. As a matter of fact, like I showed you the chart, it is growing really, really fast. at the same time as the dollar, which is extremely bullish. So I would expect gold to continue to do well. And of course, Bitcoin has been decoupling over the last couple of days from the stock market. As the stock market is going down, Bitcoin is going up. So we want to hold assets outside of that system that's not affected. Of course, commodities is a perfect trade. You can buy commodities ETFs is an easy way to get broad exposure to that. Of course, like I said, gold and Bitcoin. We want to be able to have assets that we custody ourselves. Of course, gold and Bitcoin both fit into that. Maybe some cash at home as well. I say custody yourself because, like we saw with the short squeeze happening on nickel, like I think we'll see happen in the gold markets as well, a lot of people are going to find out that they're holding worthless paper and they don't actually have access to the commodity itself. Now there's other ways like uranium. We can trade the Sprott uranium fund, for example, which actually holds spot, gives us direct exposure to spot as well. Some ways to do that. And then maybe think about becoming a little bit self-sufficient in energy and food sources. So if this supply chain disruption in the commodities, specifically around food, like I said, Russia controls over 30% of that. That could lead to massive disruptions throughout the world in food. So, maybe at a minimum, when you go to the store, buy a little bit of extra supplies. Even better, maybe find some local farmers, some farmer markets that you can make some deals with to get directly. And even better, maybe find a way to grow some at home. Most people can grow a pretty good garden at their house. Some ways that you should think about. But what do you think you should be doing? I'd love to hear a comment down below what you think about this Bretton Woods 3 moment, a disorderly move from a fiat-based system back into a commodity money. Let me know what you think down below. Of course, I am having this event, Market Disruptors Live, the second annual event. I'm going to have 15 of the top experts: Harry Dent, Danielle DiMartino Booth, Luke Grauman, Jeff Booth, Greg Foss, George Gammon, you name it. There's a link down below. They're going to tell you what you should be doing as well. That's what I got for you today, all right? To your success, I'm out.